Okay, in the last class I told you about the accounting equations, accounting conventions, okay, and the analysis of transactions. After analysis of transactions, we have to go for journal entries. Journal is nothing but day book, and every transaction must be noted in this. Why we have to note? What is the necessity? The necessity is we cannot keep all the transactions in our brain. Okay, some transactions we may skip, we may not remember. So, in that way, when we go for this day book or journal, okay, whenever we are having a transaction, whenever we come across a transaction, automatically if we note down, then we can easily refer and we can easily recollect what had happened. So for this only the journal is to be prepared. So in accountancy subject, journal is the starting point where all the transactions are entered in journal. Okay, in when you are preparing journal, it will have 5 columns: date, particulars, LF, ledger folio, then debit amount and credit amount. Okay, date, on what date the transaction had happened, that date we will write. And in particulars column, we will write which account is to be debited and which account is to be credited. When you are writing which account is to be debited, at the end of the line, you have to write DR, capital D R, small r. And below that, you have to leave some space in order to differentiate what is the debit item, what is the credit item. In order to differentiate, we have to leave some space and we have to start with 2, TO2, because the CR will be replaced by the letter by the word to, and which account is to be created we have to write down. And LF, ledger folio, when we are going to post the different accounts in ledger, okay, we have to take into account the number of the ledger, and then after that you have to write the debit amount as well as the credit amount. Like this, you have to prepare the journal. And after preparing the journal completely, you have to add the debit amount and the credit amount. And these two amounts and these two columns, they will coincide. That is, they will tally. This is the way that we have to pass journal entries. And this is the starting stage that we will come to know what transactions had happened and what the entries are to be prepared. When we are preparing, okay, we have to write a small narration in particulars column, and that narration it starts with being or with the word for. These things you have to write a small brief explanation of that, and after that you have to draw a line in order to separate one transaction with that of another transaction. This is compulsory. This is compulsory. And the process of preparing journal entries, we'll call them as journalizing. So in accountancy, journalizing is the first important topic that every person, every kit and kin, they have to know. Okay? So after preparing the journal and everything, mean small these things, we'll call them as journal entry. Journal, journal. It is not GENERAL. JOURNAL, journal entries. And the process I told you already that it is known as journalizing. So journalizing of transactions is compulsory when we are going for this accountancy subject. After journalizing, we have to go for postings. That is, we will take into account one more book, and that book we will call that thing as ledger. And this ledger is also known as main book, where all the accounts are prepared in a serial manner, in a seriatim manner we will prepare. Okay, and whatever it may be the entries that we come across, we have to take them and we have to post them in this ledger. So the heart of any business, The heart of accountancy subject is nothing but journal. That's why it is also known as main book. Main book. Okay, journal is known as day book and main book is known as ledger. And these entries, whatever we have prepared, the journal entries, we have to post them into ledger. And the page numbers of ledger we have to write in this LF column in journal. Okay, so ledger is the main book that we will come across and we have to post them. So writing the journal entries into ledger, we'll call that thing as posting of in the ledger accounts, posting of ledger accounts. And in ledger we will come across again, okay, debit side and credit side, that is left hand side and right hand side. So there also you will come across some columns: date, particulars, JF, that is page number of journal, and amount. In the same way, on the right hand side or credit side also, you will come across date, particulars, JF, and amount. Like this, you have to prepare and you have to write. And after posting all the entries, you have to close the ledger accounts. Don't forget that, okay, we have to leave the ledger like that. Every time, every account must be closed. That is, you have to add the debit side totals as well as credit side totals. And these two totals, they must tally with each other. Okay, and after that you have to draw two lines, okay, stating that the account is closed. Okay, one more thing here we have to find out is whether the debit side balance and credit side balances totals, no, not balances, totals, whether they are tallying or not. If they won't tally, you have to write on the lesser side by balance or carried down or to balance carried down. If debit side is more and credit side is less, you have to write by balance carried down. If credit side is more, then you have to write to balance carried down. And this balance carried down amounts, they will be on the opposite side, okay, for the next month or for the next year. Okay, and you have to write these balances brought down below the total. Below the total. Don't write up and downs, please. Don't write up and downs. You have to write below the total, you have to write. Okay, whether it may be on the debit side or on the credit side. Okay, all the totals you have to do and all the carried down balances and brought down balances you have to record correctly. Then only you can say that the ledger account is to be closed. So ledger is nothing but a summary of all individual accounts prepared one by one, one after the other, one by one after the other. So all the things you have to do. So this process, okay, entering the journal entries into ledger accounts, this process we'll call them as posting of accounts. After posting of accounts, after balances carried down and brought down, we have to show them on the opposite side, that is brought down balance. One thing here I am telling you perfectly and specifically, that the brought down balances, they must be written on the opposite side of carried down balances. If the carried down balance is on credit side, brought down balance must be on the debit side. If the balance carried down amount, if it is on the debit side, the brought down balance must be on the credit side. So like this, you have to prepare ledger accounts. And this ledger is very, very important for further processing. Okay, so for further processing means what, sir? Okay, we have to take into account the balance barrier, brought down balances, and we have to write in a systematic manner one after the other. Okay, in a statement, and that statement we will call that thing as trial balance. Trial balance, when you are preparing trial balance, it is nothing but a bird's eye view of a business. A bird's eye view of a business. How a bird can view in a crystal clear manner what is going on the earth. In that way, the trial balance is nothing but a bird's eye view of a business. And moreover, the trial balance is nothing but an indicator of balance sheet. When trial balance tallies, when trial balance agrees, automatically the balance sheet will agree. Most of the business people, what they will do is, they will always concentrate to prepare the trial balance and see whether the trial balance agrees both on debit side as well as on credit side. You can prepare in an account manner or you can prepare in a statement manner. There you have to take into account serial number. Okay, there also you will come across 4 columns: serial number, particulars of account, okay, debit amount and credit amount. So you have to write. And when you go for trial balance, okay, preparation of trial balance, there are 2 methods. Okay, what are they? Totals method and balances method. This totals method, whatever it may be the total of ledger accounts, without taking into account the carried down or brought down, we have to write debit total on debit side, credit total on credit side, and we have to see. That is totals method. And this totals method, it was abolished long back. Now everyone, they are following this balances method. Balances method means they have to take into account the brought down balances, and wherever it may be, whether they are on debit side or whether they are on credit side, we have to write, okay, on that side. So thereby we have to add the totals. So when the totals, when they are equal on debit side or credit side, when they are equal, there is no necessity for us to go further. That is, trial balance tallies or trial balance agrees. Okay, then you can go for further processing. But sometimes what will happen is, due to some mistakes, okay, either on the debit side or on the credit side, the totals, they won't tally. So there you must make them tally. There you must make them tally. How we have to make them? By writing, by creating a separate account known as suspense account, whether it may come on the debit side or it may come on the credit side. So suspense account, whatever it may be, the difference between the debit side and credit side, you must write on the debit side or credit side, okay, keeping suspense account. So there, what you are doing is, you are temporarily making the trial balance agree. You are making the trial balance agree over there. Okay, after that, okay, you have to go for further process. So trial balance is very, very important for any type of business, any form of business, whether it may be a sole trade business or partnership business or joint stock companies or cooperative societies, whatever it may be the type of business, compulsory preparation of trial balance is must be there. Okay, and you may ask me, sir, whether this trial balance will come for service organizations. No, trial balance, the service organizations, they won't prepare the trial balance. Instead of preparing trial balance, they will prepare receipts and payments account. Instead of trial balance, they will prepare receipts and payments account. So that is the difference between the service organizations and other organizations. Okay, except service organizations, okay, except service organizations, all the organizations, whether they may be manufacturing organization, trading organization, whatever it may be, they have to compulsory prepare the trial balance. Okay, so with this I am concluding, and the next class I will go further. And one more thing I want to tell you all is, my dear students, don't afraid of the exams. Don't afraid of the exams. Okay, read the question paper 1 to 3 times. Thereby you can be in a position to answer them, because half of the answer will be in the question paper. Half of the answer will be in the question paper. You have to read and you have to understand that, and you have to proceed. Okay, what he is asking, what information he had given, what we have to do. Here, when you are prepared, when you are going for accountancy subject, you have to be very cautious in the procedure. Don't think about the answer. When you see the procedure, how you are doing, and for procedure, if the procedure is correct, perfect, okay, 100% correct, then automatically you will get the answer. So be careful in writing the exams, and please subscribe to my channel. Thereby, I can be in a position to post some more videos for your benefit. Thank you. Thank you very much.